He goes on to say, Mon Dieu, the media, woefully ignorant of currency theory, propagandize these stupid explanations, and the public is left totally in the darkness to the real cause. And that's why I think we're going to get monetary Armageddon or currency collapse. Tuesday, June 4th, 2024, Maneco 64, Home of Alternative Economics and Contrarian Views. The other day I was thinking about my experience in the last 22 years or so, almost a quarter of a century, and I realized what I've been doing is prepping for monetary Armageddon, and I think it's coming very soon. Yes, I can't tell you exactly when, and I'm going to talk to you a little bit about my experiences, where I've come from, and so you can understand a little more how I think. So, where I come from, so that's really important. I was born in Brazil in 1964, and I grew up in Brazil. Yes, I did travel a lot as a kid with my sisters and my parents. My father had his own business and he had to travel a lot. Sometimes he used to take us with him. So I got to know the world. I was lucky to get around by the time I was 10, 11, or 12. So that was the beginning. And yes, in the 1970s and early 80s in Brazil, we had a lot of inflation. We had a lot of currencies. I remember when I was young, 5 or 6, we had the Cruzeiro in Brazil, and my dad kept talking about 1,000 reais, which is 1,000 reais, and I used to say, Dad, why are you calling a Cruzeiro 1,000 reais? You know, I never understood. Well, because they had a lot of currency collapses in Brazil, and they had new currencies. So, and I remember in the 70s, all the talk was the oil price. Oil price drove inflation around the world, and everyone believed that. And then I went to university in the States in the early 80s. I finished university in Switzerland. By then, my parents had moved to Switzerland, and I started working in a small private bank in Geneva. My degree was international relations with an emphasis in economics. But I never once learned about money itself. There's never a course in both universities that I was in about money. The only thing I heard about gold was in one of my courses. The professor said, well, in 1971, Nixon closed the gold window. But that was it. He didn't even elaborate on why that was important. So I moved to London, of course, in 1992, and I started working in the City of London as a government bond broker in the futures and options market. I did that for 20 years. I was quite successful. I started my own private pension. I did everything normal, and I never questioned money. Even though in the bond market, of course, you're dealing with money and interest rates and the economy. So when did I start prepping for monetary Armageddon? When was it? Well, it was after the dot-com bubble had burst in the early 2000s. My private pension got hit fairly significantly. And my wife and I sat down and we said, maybe we should diversify. Maybe we should buy some gold. I'm not sure why we said it. And that was in 2002. And at the time, I wasn't thinking of monetary Armageddon. I was just thinking of diversification. But as time progressed and I learned more about money and economics, and of course, at the time I was working for major banks and brokerage houses, But I was always someone that questioned things and wanted to learn more and more. Read, as you can see, I've recommended many books. You can go. I have a book recommendation playlist. You can look at that. And when I bought my first gold coins, I wanted to look into gold. I was holding those Krugerrands that I bought, and I thought, wow, this is special. And by that time as well, I had read Ayn Rand, Atlas Shrugged, and I got into the free market sound money field, or part of economics, and the Austrian school. And from then on, I've woken up, and I don't know why it happened to me. Maybe it's because I was always questioning things, but I can show you here. This is the first time I got into gold, and I still got the receipt, and it was a jeweler in the city of London. And you might think, why did you buy it from a jeweler? Well, because he was a bullion dealer too. He made very good prices. John Haynes, he was based in St. Michael's Alley, and the first coins I bought here, 225 pounds and 45 pence per troy ounce. Yes, right now we're at 1,836. We've been above 1,900. But my point here is not to brag about the price. So I can show you here. I don't mind showing it to you. There you go. There's my name up here. There's the date, and there's the amount. And I still have that. So that was the first time I ever bought gold. And then about a year later, I found out about gold investments, and that was the first time I bought some silver. And I can show you my old address because I don't live there anymore. So silver at the time was £3.67 pence. I bought a kilo bar, and yes, there was VAT, which gave me a price of £4.31. And right now, as we speak here, silver's at 24 pounds. And I get that question a lot from people. I don't like to buy silver because there's VAT. And I've always said to them, well, you shouldn't worry about the VAT. And at the time I did kind of worry about the VAT, but now that silver's at 24 pounds, £4.31 is still a good price, despite the fact I had to pay VAT. So that's when I started buying gold and silver. And I started reading a lot, buying books. I started following more the central bankers and their declarations. And I've spoken about this before. The Bernanke speech in November 2002, which is a few months after I bought my first gold coins. That was the helicopter speech. That convinced me even more that we're going down. That was one of the moments that I thought to myself, if I want to protect my family financially, I need to keep hold of those gold coins I bought and try to get even more if possible, because that's the other thing about gold and silver. It's not an investment. It's not speculation. It's saving for a rainy day. And I've been fortunate that over the last quarter century, since 2000, gold has been an almost perfect instrument for saving. And why is that? Well, because it's returned almost 10% in all the major currencies per annum. And it's really protected you against the real rate of currency debasement. And that's something that's very important. So, and some people might say, yeah, well, you've waited long enough. You were lucky to buy at a very low level. But as with every investment, and I'm calling gold and silver an investment here because it has acted as an investment in an age of fiat currency and currency debasement. there's always people out there saying, well, it's too high, it's going to come back down. And that has been, of course, the most difficult challenge. It's a psychological thing. You have to believe in the fundamentals. You have to believe in the story. So, and I think learning about what gold and money and fiat currency is all about has helped me, but it hasn't been smooth sailing, because you probably know, if you've been in gold and silver for a long time, that it can be frustrating. Gold and silver can do things that make you think, oh, it shouldn't be doing that, right? With the price suppression schemes and everything. But I think the bankers in the long term, they know they have to let the only way to keep this fiat currency game going is to let gold rise and their currencies drop. It's just very natural. They just want to do it in a way that doesn't get people's attention. They don't want the public involved. And that's what I've been trying to do here on this channel, wake people up about the monetary system since 2015. I tried to do it as well before I started this channel with friends, family, colleagues. Yeah, not all have listened, but I can't help that. So, yeah, it's been a psychological kind of warfare. And I thought in 2008 that was it, that was the end, and that gold would rise again. But it didn't, because they came out with something new called, well, not new because it's been done many times in history, which is just money printing. They call it QE as a euphemism. But I think they're on their last legs, the central bankers and the monetary system. And as I said, yeah, it's been a psychological war, because they're trying to get the public to stay in the boiling pot of water, like the frog. They don't want you jumping out and safeguarding your savings. They want you to stay in there, and eventually you're going to boil to death unless you jump out. That's what gold and silver do for your savings. So one of the big psychological warfare events for me was this one, Going Gold. The article about 2 years after I bought my first gold coins by the FT. Well, it's an editorial, and they said the pointlessness of holding bullion continues to sink in. And I even cut it out. We didn't have iPhones back then. I was on my way to work, standing on the platform waiting for the 6:08 train into the city, and I turned to the editorial page and I saw that, and I was like kind of shocked that the FT would write something like that. And I think it must have put a lot of people off from buying physical gold or silver for that matter. But at the time I thought, I was kind of annoyed, but then I started laughing and I cut it up and had it laminated in the office. And at the time, gold was testing the 400 level. And the 400 level was a bit like the 2000 level back in those days. So it's not always been easy, because you're always buying at the all-time high, let's say, or you have to wait. And that's what I'm trying to say. I think I'm not saying it's going to take 20 years, but when we look back in a few years, people are going to kick themselves and say, why didn't I buy it at 2100, 2200, 2300? I think that's the way it's going to be. And there's 3 books here that I wanted to show you. And I'm going to start with this one here, What Has Government Done to Our Money? By Murray Rothbard from the Austrian School of Economics. I recommend you read this. I read it early on. My wife and I actually went to the Mises Institute in 2002. I think it was in October. and it was for their 20th anniversary conference. We had a very good time. I got to meet Ron Paul, and I think that's where I bought this book. And you will understand the whole monetary system and what government has done to our money. And you will understand what money really is. So highly recommend that. You can get a free PDF via the Mises.org website. I'm going to put a link below in the description. The other one that I also got from reading about free market, economics, freedom, sound money was this one here, Fiat Money, Inflation in France by Andrew Dixon White. This has probably been one of the best books for me, and it's made me realize that I am prepping for monetary Armageddon. And this is what happened in revolutionary France with their experiment in QE, money printing. Highly recommend this too. I'm going to put free PDF in the description. The last one, I don't know when I bought this. Probably around the 08 crisis, just before. And it's a classic. It's called The Triumph of Gold by Dr. Franz Pick. I'm not sure how easy it is to get this. He wrote this in the late 80s. And he could see it coming, of course. He knew from growing up in Central Europe, in Austria, because Austria got affected by the Weimar hyperinflation, that the same thing was going to happen to the dollar. He had moved to the U.S. I think he died just after he wrote this book, Dr. Franz Pick. But he's got really good, interesting points here in this book. And one is about currency debasement. And it's on page 58. And I'm going to read it to you. And he says, few people understand the concept of currency debasement. This process of debasing the currency to pay for government, deficit spending, has been going on for centuries. The Egyptians did it. The Greeks and Romans did it. Countless other nations have done it. Now it's going all over the world. The process of monetary inflation and its result, soaring prices, is a simple concept. Adam Smith understood it, as did John Stuart Mill, David Ricardo, and other classical economists. And here's the key part about what's happening today. But alas, today few people understand the concept. Instead, thanks in large part to the writings of John Maynard Keynes, higher prices are laid at the feet of excessive labor wage demands, greedy corporations, Arab oil sheiks, and the disappearance of anchovies off the coast of Peru. Sounds familiar, right? No one, even today, they haven't learned. They always talk about what he said here almost 40 years ago. He goes on to say, Mon Dieu, the media, woefully ignorant of currency theory, propagandize these stupid explanations, and the public is left totally in the darkness to the real cause. And that's why I think we're going to get monetary Armageddon or currency collapse. And when will that happen? Well, it will happen when you won't be able to buy gold and silver with your local currency. That's the way it is. And why? Well, because gold and silver are real money. And if you can't exchange your fiat currency for real money, it's just a worthless piece of paper. Let's go to the end here where he talks about the triumph of gold. And one thing I would say, I've been prepping for monetary Armageddon. And even, let's say, if magically Martians land on the planet tomorrow and they pay off all our debts and bring thousands of tons of gold with them, I think all the stacking I've been doing will still be worth something. But anyway, I don't think that's very probable. So this is the last point he makes here. Throughout history, from the days of the pharaohs down to Mr. Baker, I think he's talking about James Baker. He was Secretary of the Treasury before becoming Secretary of State. Gold has always been man's best protection against dishonest government money management. Yes, we've got that in spades, and it doesn't matter who's in power, I would say. Gold is money. Gold has always been victorious over futile government attempts to dethrone it. The history of men's attempts to conquer gold is fascinating reading, but in the end, gold always wins because gold has no master. May I take you back to the Vietnam War? Each day for over 4 years, we had a victorious bulletin until someone added them all up and discovered that many more Vietnamese people had allegedly been killed than ever existed. Nevertheless, we had victory bulletins. Now we are into a war on gold. Attempts to dethrone gold by the U.S. Treasury and its wholly owned subsidiary, the International Monetary Fund, have accomplished nothing. The price rapidly regained any losses from the IMF and U.S. gold sales. The U.S. gold sales were tragic comedies featuring black humor, especially when you realize that the U.S. has, it says, less than 8,600 tons, while the Russians have more than 9,000 and more likely 9,300 tons. The U.S. war on gold was met with defeat at every turn. You know the record as well as I do, and there is little need to review all the events that have transpired since the collapse of the London gold pool in March 1968, down to the current pathetic, whimpering attempt to persuade governments anywhere to sell gold, no matter how small or insignificant, to the world market. Now let me declare openly and on the record that the U.S. Treasury has lost the war against gold, and it doesn't want to admit it. Yes, I think he was a bit premature, but it's happening as we speak here, I think. And it's not going to stop. As I said, I don't know when Armageddon is going to happen, but in the meantime, gold is going to continue to do its job of protecting savers versus currency debasement, and so is silver for that matter. It's not just gold. Silver will probably do it in spades, but silver is a lot more volatile. I think Jim Sinclair called it gold on steroids, so that's how I see it. So let's now look at where the markets are this morning. It's 8 o'clock London time, 8 a.m. We had a pretty sharp drop in bond yields yesterday. The 10-year yield dropped about 10 basis points. We had weak economic data from the U.S. Silver, of course, traded below 30, then rebounded back above 30. Gold did quite well as well. Right now, though, we're at 23.44. We're down about $7. We're near the lows. The high's been 53. Silver is at 30.60. It's down about 13 cents. A high overnight has been 30.90, and the low has been 30.50. So, yeah, and why do I look at the markets every day? And well, because some people like to know where the markets are. And this is what I used to do for my institutional clients when I worked in finance. I used to talk to them every morning. A lot of them had just come into the office, and I would tell them what was happening. And this is one of the things that I decided to do on this channel. Doesn't mean to say that I'm trading all this stuff. It's just to give you an idea where things are. In terms of the stock market, the Dow is down 58, the NASDAQ future is down 58 as well, and the S&P is down 10. The currencies are very steady. Yesterday, of course, we had a big drop in crude oil prices. Overnight, crude oil is down another %. So WTI is at 73.23, and Brent is at 77.50. So yeah, there you go. Monetary Armageddon. Yes, it's coming because there's no way out. There will be no deflation, people. Our politicians are going to continue to inflate because if they deflate, they'll be out the door and lynched as quick as you can say Jack Robinson. That's what it's all about. Do you really think the Labour government that's most probably coming into power soon here in the UK is going to deflate everything and go back to sound money? No, there's no hell will freeze over before that happens, and that's why we're going firmly into monetary Armageddon. And the same thing is going to happen in the United States, no matter who wins on November 5th. You can bet they're going to keep inflating because that's all they know how to do. And with that, I'm going to wish you all a very good day. Take care. Bye.